Welcome back to earnings season. We're smack dab in the middle of it. The market's had a big freak out over the DeepSeek AI, which seems to kind of have stabilized over the past couple of days. We've got Bitcoin still testing all-time highs, and just a ton of executive orders coming down the pipe. Everybody trying to figure out what's going to happen with inflation and rates. Guys, what is the big story of this week that we should lead with?
Buying tech at any price, buying tech at any growth rate. Buy.
The numbers don't even have to be good. I mean, if you're Apple or Tesla, the numbers don't even matter anymore.
Palantir breaking to a new all-time high today, above 84, 85. Yeah, I mean,
it's only 65 times sales. So, seems reasonable.
For anybody that doesn't know, 65 times sales is super cheap, right?
Yeah, Trav, give some perspective on that one. Give us like a nice range of what, stocks normally trade at in different sectors or tech sectors.
Prior to the last year or so, 20 times sales was considered like a nosebleed valuation multiple. So we're in uncharted territory, and I don't know if it's quite as silly as the .com boom and bust, because back then you had companies that were just like concepts on a napkin going public. But these are real companies that are getting real contracts and real revenue. But nonetheless, investors and indices seem to be paying pretty much any price with no regard to valuation, and that on the long-term basis tends to not work out super well. But hey, if you can party while have fun while the party's still going, I guess, it's all good.
Is it giving 2021 vibes?
It is, yeah, on a few stocks, not everything. It's maybe not quite as broad-based. We are not seeing quite as many random squeezes or random companies that are just popping off. But of the companies that are seen as, exciting stocks or cult stocks, or, tech winners, or if they're in some sort of hot theme, like say quantum computing or AI, then, they're pretty much getting bid to the moon. So yeah, Palantir at, 60, it's like 67 times this past year's sales. Maybe it's only 55 times next year's sales, but I said at the end of last year, I think there will be about a 30% correction at least in Palantir at some point this year. The expectations are just so sky high. So I think, again, whether or not that 30% comes off of an all-time high at 100, or whether, it reverses on Monday when they report earnings, it's hard to say, right? It's hard to get the short-term timing on that kind of stuff right. But it's kind of silly what investors are willing to pay out there for some of these stocks.
Yeah, it's weird, right? Because you've got like today a big breakout on Google. You've got Palantir breaking out, but then, there is some fear in the markets, right? NVIDIA took a big hit this week with the DeepSeek thing. So we can talk about that. But yeah, there was a pretty big gap down. NVIDIA is right now sitting on top of its 200 period moving average. So the big question is, will bulls bid this back up and close the gap? Or is this the start of an extended bear market? And I think that's probably the biggest question that I've seen floating out there is like, hey, is the AI boom over? Is China's DeepSeek going to crush OpenAI and Google and everybody else that's in the race for this? I've seen narratives on both sides of the coin where some people are saying that this is actually bullish for AI and for NVIDIA, and that, GPU sales are going to accelerate. And then obviously there's the bear case. So what takes do you guys have on that?
Trav, I think you have a great take on the profitability of as technology gets easier to duplicate and create. Yeah. I think that's a great point that you made.
Yeah, I mean, there's the longer term Jevons paradox argument, which is, that as you bring down the costs of AI dramatically, which is what DeepSeek appears to have done, that it just opens up more use cases, and then ultimately demand grows so much that, there's no such thing as overcapacity, because demand will just overtake it. Now, I think what that ignores is there's a time scale to that, right? So like supply, we may be oversupplied in the short run. Even if demand is going to grow to the moon long run, NVIDIA could still take a hit, right? NVIDIA could still get hit for a few quarters or a few years. There's also a sentiment aspect, of course, to the stock itself. But yeah, I mean, there very well could be a lot of efficiencies that a lot of the companies are gonna fast copy here. And maybe we could see, some potential cuts to some of the AI CapEx budgets, or maybe they just shift elsewhere. And so I think long term, yeah, it does look like, we're going to have so much AI embedded in everything. And this will enable so many AI use cases that, it probably doesn't hurt NVIDIA on the long term. But yeah, the DeepSeek stuff, I also saw some takes out there that, they're lying because they're Chinese, and, they actually spent way more on this model than they said. And no, actually, if you look at the details, they've open sourced everything. They put everything in papers. They were writing about this, by the way, as early as December, and the market just seems to have not picked up on it until a month later. But they've open sourced everything, so it's very obvious that there are real breakthroughs that they made, and they go out and state directly that, look, the 6 million figure only applies to this particular training run. It doesn't apply to all of the other R&D budget and all the other capex that we've spent building up our AI capabilities from the get-go. So I think they're not trying to. It's not like the Chinese government is here trying to pull one over on everybody. This is a company that has done a lot of really transparent things around what they're doing with the models. So we're already seeing other companies, by the way, that are copying some of these techniques, and we're seeing other models emerge. And of course, we're going to see the U.S. tech companies also implement some of that stuff, as they've already said on some of their conference calls this week. So I think people got a little bit carried away with some of the more extreme narratives here, but I do think there could be an actual financial impact. And I think the days of all of the companies just spending as much money as they can may be coming closer to an end. So we'll see.
So why do you think that Meta / Facebook actually popped this week on the news? It was like when NVIDIA had a gap down, everybody's like, oh, this is actually good for Meta. So what is the bull case there? And do you think it's justified?
Yeah. I mean, yeah, it was an interesting divergent set of reactions after the initial DeepSeek freakout on, what was it, Monday, and over the weekend. And so when we saw stock price reactions, they actually reacted just as I expected they should. You had companies that that can benefit from a decrease in AI costs. So companies like Meta, companies like Adobe, companies that are actually implementing AI in their software or in their products, are going to benefit from, say, a 90% reduction in the cost of AI. And Meta is one of those companies that they've come out and said, look, we're weaving AI into all sorts of different parts of our products, and therefore, we are still going to spend a lot. And in fact, they're still sticking to their 50% growth in AI CapEx budget this year. They're going to spend 60 to 65 billion total of CapEx. Meta is in 2025, which is up 50% over last year. So they're still spending a lot, but over time, the thinking is that Meta wins because they're able to implement whatever models are cheapest and able to get more efficiencies out of AI spend. And on top, we may have pulled forward the ability to actually implement AI, because if we can make it 90% cheaper to run all these models in real time, then we're actually able to, in some cases, accelerate the deployment of AI models. So I think that's why the market saw them as potentially a winner here among a few others, and I think that's generally right. So yeah, I mean, Meta is absolutely crushing it, and amazing how the sentiment has shifted in just 2 or 3 years' time.
Man, I remember when this was a quote unquote busted IPO, right? It's like after IPO, the stock price was down like 50% in the first couple of weeks. And everybody's like, social media is dead. Oh my God, ad revenue is going to get crushed. And then look what the stock's done, just over the past decade plus. And you guys actually nailed this trade, right? So for anybody that's listening on the podcast, a couple of years ago, Meta fell from the mid 300s down below 100, and I think you guys pretty much nailed this low, or got pretty close to it, right?
Yeah, we were buying in 2022, and if memory serves me correctly, yeah. And so
I was buying low hundreds, and I think even a little bit in the 90s, which is pretty close to where it bottomed. And we had alerted in our community, and I even talked about it a little bit on my Stocks and Coffee podcast that I had going back then. I think we probably talked about it here on the show as well. We'll have to go back and look at the tape, so to speak.
Yeah. I mean, I just remember sentiment just shifted so fast for Meta. And what was the narrative? It was
they were doing a lot of spending, right?
spending a ton on the metaverse, and the metaverse wasn't really playing out from a financial perspective. They had also hired a ton of people right around COVID and just after COVID, and so their expenses had ballooned. And in fact, their free cash flow had gone from like $40 billion a year down to almost zero for 2022. And then we were also, of course, in an overall tech stock bear market. So everything, everyone was saying, oh, Meta, their growth is slowing, their expenses are too high, the financial profile of the business sucks, they're spending all this money on the metaverse, and Zuck is still committed to it no matter what. He's got his head in the sand. And then, quarter after quarter, they actually started announcing layoffs and efficiencies, and started talking about getting back to, their core mission, so to speak. And also they're still spending money on the metaverse and stuff like that. And they're actually still spending a lot more CapEx, and their expenses are up a lot in the last couple of years, but revenues have grown, I think, a lot better than people expected too, as the ad market recovered. And so, yeah, the story there definitely shifted a lot. I mean, it's funny how you get sentiment matching the stock price. That's pretty much true in almost every situation. But like at the bottom, everybody's just totally shitting on Meta and Zuckerberg, and it's hard to bet against that guy. I mean,
yeah,
isn't he cool now?
Cool is a stretch,
Chad, right? Yeah, he's got some good PR people for sure. I mean, the new hairstyle, going on Rogan,
gold chain.
Yeah, man. I mean, and I'm like, look, it is funny how the behavior of founders and CEOs kind of shifts with the political tides. It's like, okay, Trump's in. Okay, now this the narrative is anti-woke and stuff like that. So it's funny. I just think how much of that is actually genuinely him, and how much of that is people saying oh, okay, we need to go this direction and flow with the political tides, if you will.
I think the other issue with Meta at the time was there was this really negative sentiment around people aren't going to live in the metaverse. They thought Zuck wanted us all living in the metaverse all the time, or whatever they thought it should have been. And I think that contributed to the sell-off in the stock, because people were like, we're not going to be living in the metaverse, but they were maybe missing the point of what the metaverse was really meant to do, which is to have meetings and have productivity with other, colleagues for work, things like that, the use cases that really mattered. So I think that contributed to it as well. It's just the overall sentiment of people hating the idea of living in a metaverse.
Well, I can tell you what I really miss, though, is I miss those day in the life videos of the girls going, oh, okay, I wake up, I have a breakfast, I work for 20 minutes, and then it was just kind of oh, wow, yeah, look at all the waste. Look at these employees that are doing jack shit. And I know they've done a lot of layoffs.
And now AI is coming for some of those jobs too. Yeah, it's pretty funny. The metaverse thing is interesting because no one's really talking about it, but I think Meta still has some intentions there. And, for instance, maybe they've shifted their product strategy a little bit away from Oculus, but, the Meta Ray-Ban glasses, the augmented reality stuff is quietly doing pretty well. I think they sold more than 1 million units of the Meta Ray-Ban smart glasses. So wow. That could be, that could be an interesting emerging opportunity for Meta as well in the years ahead, is, kind of building on the strength of the Meta smart glasses. So that'll be interesting to watch too.
Yeah, good point. Let's do an overview of the markets this week, because we are kind of in an interesting time, smack dab in the middle of earnings season, which is creating a bifurcated thing where you've got some stocks that are just going wild and you have others that are actually pulling back. But right now, if we just take a look at Bitcoin, we're still kind of squeezing right up against this 106K zone. This is we've had a dozen days or so that have actually tagged this. And so I sent out a X post. I'm going to try to get away from the word tweet, even though I love it. But I sent a survey out saying, hey, what do you guys think? Are we going to get a breakout above this or a washout? And it's pretty much split evenly, I think. So I'm bullish until we're not. And especially with the S&P and NASDAQ rebounding this week after that kind of initial fear-based reaction to the DeepSeek. It's funny. It's over the past couple of years, we've had these moments where there's a fear-induced panic that lasts for maybe 3 days, right? If you guys remember January 2023, the regional banking crisis, then we had the Japan trade that was unwinding, then we had this DeepSeek thing, but you're in a strong market when you have these fear-based narratives that hit really hard, and then in like 3 to 5 trading days, everybody forgot it even happened.
I feel like this is part of the argument around like how concentration, how the top 10 stocks in the S&P are almost 40% or roughly 40% of the market cap, which is up a lot. That's pretty significant. And I've had this argument that this is going to lead to these more volatile but shorter term corrections or sell-offs, like that DeepSeek thing. The market was down quite a bit. I thought so.
And yeah, Nvidia was down 17%, and some of the other AI infrastructure stocks were down 30 plus percent, like Vistra and even some of the Bitcoin miners, like they were down 30% that day, which is, I mean, that's a huge one-day move. I mean, 17% off Nvidia. I mean, that was the largest as far as total dollar market cap lost in one day. That was the largest total dollar of market cap lost in a single trading day.
So, it was huge, and
20% pullback from like peak to trough. That's a lot of value.
Yeah, so I think that we need to be watching that. We are probably going to see more unexpected sell-offs like that.
Oh, for sure.
The indices, and it's going to catch people off guard. But the flip side of that is, to your point, Chris, how everything is just getting bought up to no end so fast. And I really don't know if that is a function of just this overall strong bull market and growth continues to stay steady. We got the GDP numbers, things seem to be okay. I don't know if it's a function of the economy or if it's a function of the passive buying mentality and just how this has worked for so long at this point. Buying dips has worked for so long that now people are just, it's ingrained in them. Buy dip, anytime the market's down, buy. And there's no fear of the correction. There's no fear of the bear market. And I find that very interesting. And it's going to work until it doesn't. We all know this, right? But yeah, that whole environment of dips being bought up quickly, volatility, it sucks at first, but it really doesn't matter because the dips get bought up. I can see that continuing for years to come. And I don't know when it's going to end or what's going to bring it down. But I think this market needs to correct. I feel very strongly that this market needs to correct. But unfortunately, that by the dip, it's not breaking.
What do you mean, unfortunately? Those are great opportunities.
Well,
and I love it. I mean, and there is no expiration date for bull markets, right? There is no law or rule that says like, oh, okay, bull markets can only last so long. And if there's one thing I've learned in my career, it's like, don't underestimate how far and long things can go. And like, I think it's kind of a fool's errand to try to pick when like markets are going to top out. And so, yeah, I'm in the same boat of just like, all right, we're buying dips and breakouts until it stops working. And eventually it will stop working, right? November 2021, both crypto and stocks topped out. And there were a lot of like trap breakouts, right? So eventually it's going to fail. But I'm kind of in the mentality of right now of like, let's just not overthink it. Let's just keep buying squeezes and dips and breakouts and until something changes. And I'm going to leave my bias of like, things shouldn't be this expensive away until something changes. I don't know.
It's hard to allocate. It's hard to allocate.
Yeah, and this is gonna get even more potentially volatile and tricky. Now that we're in the Trump administration, we saw that already, like a tweet or a change in his policy ideas, one day from the next can create pretty significant moves in individual stocks or sectors. And we've got the Trump tariffs on deck first, of course, for Canada and Mexico here potentially in the coming week, and then maybe China later on. And so maybe even expanding to more parts of the world. There's talk of tariffs against Taiwan and things like that. So there's going to be a lot of these, probably quick reactions from the market where the market's reacting to a a potential policy change or something that Trump is doing. And so Trump is one of those presidents that can inject a lot of these volatile little moments into the market. So we just need to be kind of prepared for that. And, a lot of times that just means like things sell off really quickly and then they come back very quickly. But there are some potential longer term implications too, like structural changes that could come out of this administration. And so we're still just on the front end of that. And I don't think we need to try to predict it exactly yet, but we are trying to read the tea leaves and figure out where things are going.
Well said. Yeah, I mean, one thing that I think has imploded pretty quickly, just over the last couple of weeks, is the whole meme coin craze. After the Trump pump and dump, it's I don't know. It feels like liquidity is kind of like slowing down in that space. And I actually tweeted like this smart ass thing. So you guys know that Murad guy, right? That did the meme coin super cycle thesis. Somebody just basically looked at his top positions, and like a lot of this stuff is down anywhere from like 70 to 95%. And, I had to chime in, and, the whole quote going around was like, believe in something, right? It's like, don't be a trader, just buy and hold. And if you believe in something, you'll get rich. Come on, man, join the cult, drink the Kool-Aid. And who could have possibly seen that imploding? So there are signs. I mean, I think this is a healthy thing, right? So market sentiment to me does not feel like completely euphoric, right? Because you've got some fear, you've got some markets that are imploding. But it's really fickle. It's like one day we're euphoric and it's like we're so back, and then the next day we're down and it's like, oh, we're so not. So that's how I'm reading like the crypto sentiment. Is it's still just fickle and kind of like not extreme one direction or the other. Do you guys think in the stock world, and I guess just in like with the consumer and the general economy, is it kind of the same, or it's more so like bifurcated, or do you guys see extremes one way or the other?
I feel like the hype feels more concentrated, right, Trav? It feels like there's still a lot of value to be had in the bottom, 490 basically. And really we're seeing the craziness in a smaller percentage of stocks versus I remember 2021 where it was just felt like everything was popping off. So I feel that's the difference in what we're experiencing now.
Yeah,
Trav,
it's not really like an all
thoughts?
tides rising, right?
Yeah, that's right. That's generally right. Although we can have periods where like, a lot more of the market does join in when we get kind of those Goldilocks periods. Like, typically it lasts a couple weeks at most, but like November last year, we had that and everything just felt like it was rising. Even the Russell, even the small craps were doing well. But yeah, it's definitely a little bit different than the meme coin world. There are like, I think, yes, particularly on the stock side, like again, like some of these companies that we're looking at that have ridiculous valuations or what seem like ridiculous valuations in the short run, like Palantirs of the world, they do have real businesses underneath that are doing well. So it's like there is something there that's kind of a fundamental anchor at least. Whereas like meme coin world, it's sort of like, I don't know why Glorp is going to be a store of value. I always thought it was kind of a weird thesis from Murad. I mean, I agree that meme coins in general would get more attention and more participants, but like things are just, they last so little time in meme coin world. There's very few that like retain value over longer periods of time. So yeah, I thought that was a weird thing for him a weird thesis. I just never really bought into it, just because if you're in the trenches watching meme coins, like it's like literally one theme is hot one week and then a completely different theme is hot the next week. It's like there's very few that hold value over multiple months.
Yeah.
But
Well, every single time I've seen somebody outside of Bitcoin, but in the crypto space, be like, hey, listen, don't trade, just hold, believe in it. The people that are parroting that are usually the people that stand to benefit the most from bag holders. Think about it. Richard Hart with Hex. He's been like an anti-trader guy, but you know how that played out. Murad with meme coins, right? And it's just the crypto cults, the people that are spewing that are basically just trying to turn people into bag holders. So as much as like trading gets a bad name, it's like, yeah, man, take profit, be smart, don't be the dumb money. I guess that's our narrative that we've been beating that drum for years.
Well
I'm
said.
just glad I'm not a meme coin trader or shit coin trader, because I feel like that would be so, I mean, I guess you've got the technicals, I think. Maybe, but like
Sometimes
that'd
it's
be
easier than
hard to
others.
predict. Yeah, like how do you know what's going to be? How do you know when fart coin's going to pop off? How do you? I just don't really know what the edge is there besides riding momentum once it
Well,
starts.
I think that's right. That's the one way to actually do it is like either, you know, do the shotgun approach where you spray a bunch of money amongst a whole lot of coins and then like hope for the best, or you can ride momentum. But the danger with that is like there are so many rug pulls and manipulation and things like that that you got to be a sniper, dude. You can't hold for long.
You can't hang around on those. Yeah, that's tough.
No, but so to that point, like, you know, okay, so if we're not in like an extreme euphoric bull market where things are just out of hand, and we're also by no means anywhere close to a bear market, this is where I think maybe we could look for signs of euphoria and like just unsustained momentum is like, look at this massive head and shoulders on the Russell 2000, right? So we've got this like this bullish pattern setting up that if we break this multi-year resistance, I think this leg would be where things maybe get out of hand. There's no guarantee that we have to break out on the Russell, but my thought is if we get a big leg there, this is where the unsustainable kind of like parabolic blow off top would come in. But the good news is we're here before that is setting up. And I just see so many charts that are in these like accumulation ranges and like kind of breaking out of these ranges. And so I think there's still a lot of opportunity out there, both in crypto and stocks. What are you guys seeing when you're out there scanning?
Can I reframe that thinking though for a second? Because I'm also thinking a breakout of the Russell and small craps, as Trev says, a breakout could actually just be rotation, right? Maybe people moving out of the more expensive tech stocks for whatever reason into the small caps because those have been beaten down so much and there's more return opportunity there. So I don't know if it would necessarily mean euphoria and hype. It could also just mean people are waking up to valuations on the tech side and they're rotating out and diversifying out, so to speak. So I don't know. That's
a good point.
Another way to frame it.
Yeah. Cool. Oh, you know what else is popping off this week is gold. So everything's kind of correlated, right? But we've got gold that's been in this really nice bull market for several years, although it's really slow and the moves aren't huge. So even though the chart's pretty, the CAGR hasn't been that impressive over multiple decades. We've also, with like the inflation fears and stuff, we've got dollar, which is down a little bit. Also, rates have been coming down a little bit. Trav, did you want to speak to that? Like, have you had any change of opinion with like inflation and bond rates? It's good to see that they pulled back over the past couple of weeks. Do you think this is just a temporary reprieve, or are we going to really start to see rates fall off again?
I think it's very data dependent. The reason for yields cooling off has mostly been data that came in line or slightly below expectations. So like there was a slightly cooler than expected PPI print. CPI came in basically, the consumer price index for last month came in basically right in line with expectations. And then, of course, the Fed didn't really say anything that jarring or scary to the market at the meeting this past week. And so all of that basically led to, I think, people to get a little bit more comfortable with buying bonds, or at least not shorting them as aggressively, and so yields have come down. But I think there's still risks that we could have hot data. We've got an unemployment report next week. We've got of course more stuff next month, like middle of the month, and so stuff like that. If we get like a scary inflation print, or potentially something like tariffs could start to stoke inflation fears again. If we get a worst case when it comes to the tariff situation, and so that could create a scenario where we do kind of hit new multi-year highs in yields. So we're not taking that scenario off the table, but I think right now what's helping this bull market for sure is that cool off in yields, a cool off in the dollar. And I think ultimately we will see yields, like if we fast forward, 9 or 10 months from now, I do think we'll see yields lower than even where they sit today. But there's still risk out there that we could see that we haven't seen the cycle highs for yields. So we're keeping a close eye.
Cool. Yeah, it looks like employment data still holding up. Initial jobless claims this week were still pretty low. Nick, is there anything you're seeing with the consumer or any other macro data that could be a canary in the coal mine, or are things just still looking pretty steady?
I think things are still looking steady. The consumer's still spending. Retail earnings, it'll be interesting. I noticed recently I was doing some retail stock research, and a lot of these names are up a lot. Like Birkenstock has been a strong name. On shoes, I don't know if you guys know the On shoes. They're pretty popular. Chris and I wear them. That stock's been on a tear. I think that Lulu is breaking out. Yeah, it's been interesting. Even Levi today. Levi seems to be up on some news here. I need to take a look at that. But
oh wow,
yeah. So I think that retail is actually in a decent spot here. If the consumer can hold up, I think retail stocks there could be some more room to run. So I feel like I'm surprised at how much the spending has been able to hold up the retail sales numbers. The earnings, from last quarter, things started to kind of bottom out and look like we were kind of coming out of a lull. So this quarter, this next earnings, round is going to be interesting to see really where the consumer is standing. Are we seeing things start to come off of that bottom, and see some good momentum in the retail side?
Yeah, it was a pretty strong personal spending number that came out today, showing December consumer spending was pretty strong and up again. And yeah, people seem like from the confidence measures I've seen, those have been ticking up a little bit. So we could also see some real global liquidity additions too if we get the rumored China stimulus coming in bigger in February. So we're in Chinese New Year right now, so the Chinese stock markets have been a little bit quiet or shut down, and so there's a lot more rumors that more details about the Chinese stimulus will be unveiled in February as we go forward, and that could be a real nice injection of global liquidity, and that's of course been a market China's been a market where the consumer's just been relatively down, I guess you could say. Spending's been weak there, and so if we get that on top of everything else, then we could have a real roaring year for the global economy. But the risk still, I think it would just to keep calling it out, is the Trump administration is just such an unknown right now with what they want to do as far as tariffs and how aggressive they want to be with new policies. So there's still a lot of stuff up in the air on that front. I think if you remove that, then you have business confidence improving, personal spending confidence improving, maybe you get the Chinese economy improving, all of that together. I mean, you could have a real recipe for a global bull market in stocks if we can get past some of the geopolitical uncertainties.
Roaring 20s, baby. Here we go.
So much for my correction, I guess. That's what you're saying.
Well, we'll get them along the way, but that's the beauty of Trump being in power, is we're going to get all these little freakouts along the
way. Oh man, speaking of freakouts, let's talk about some crypto stocks. I don't know why I said speaking of freakouts, but yeah, I don't know, highly volatile. We get a lot of questions about MicroStrategy and Coinbase, which I know you guys have been building a position in. Do you guys have any bull case, bear case, any insight you want to add to the crypto stocks specifically?
How much do I want to say?
Yeah.
Well, I think one interesting thing that happened this week was MicroStrategy raised another $500 million, but instead of using convertible debt, they used preferred stock this time around. And it actually ended up pricing at a 10% yield rather than their targeted 8% yield. So I thought that was a little bit of maybe even a net negative that I didn't expect. There was perhaps not as much institutional demand for that preferred stock at the price that MicroStrategy wanted to sell it at. So maybe a tiny crack in the MicroStrategy story, but on the other hand, they've been like pushing out their debt maturities and things like that, and we're still in a bull market. So hard to take away too much from it, but that was one interesting thing that I saw. And then, of course, you have like all these new filings for ETFs of various different crypto assets that could come into play this year. So that could give us a lot more ETFs or closed-end funds to trade in the stock market that are crypto-based. Like even Grayscale is trying to do one that's based on Dogecoin. So that'll be interesting. So.
Yeah, so let's talk about this because that is the big narrative right now is the whole, is the US going to do the strategic Bitcoin reserve? And then you've got all these ETF filings. You want to know what scared me the most this week?
Yes.
What?
Oh,
Saylor featured on the cover of Forbes along with Elizabeth Holmes, CZ, Sam Bankman-Fried.
That's
Trevor
not
Milton.
Good.
Yeah, this is not good.
Oh boy.
And again, I'm sure there's people that have been featured that are not complete frauds, but yeah, I don't know. This just freaks me out a little bit.
Yes, the magazine cover indicator.
Yes.
Yeah, very interesting.
It's kind of like the 30 under 30. I mean, how many frauds have we seen featured there? But anyway, yeah, I don't know. It's a weird time because was it last week? Man, the days are starting to blend together. But whenever Senator Loomis was tweeting like something huge is coming, and everybody got excited and was thinking that they were going to announce, the big strategic Bitcoin specific reserve. And then like there was just a lot of language about crypto, and then a lot of people talking about Ripple and those weasels trying to like work their way into the government, which for anybody that doesn't know, Ripple is a centralized scam. Okay. It is not a truly decentralized currency. It is bullshit. That's just my opinion. I'm sure some people will disagree with me and that's fine. But if you do even a little bit of research and you understand what Ripple is, it is the antithesis of Bitcoin. So rightfully so, the crypto social world got into a bit of an uproar when it looked like the government was starting to talk more about crypto instead of Bitcoin. And look, I'm all for competition, but at this point, if you don't know why Ripple is a centralized shitcoin, do some research because it's really ugly. It's not a good thing. And for the US government to go down that route, it would not be good. So anyway, Senator Loomis came back out. Let me see if I can pull this up. And I don't know if this is a good or a bad thing, but she basically put on laser eyes. So let me see, Loomis, and they're gone. Okay, never mind. Maybe she just posted a picture. Yeah, anyway, I think the point got across that like, hey, people are not going to be happy with a crypto reserve. It needs to be Bitcoin. So do I trust the government that they're going to do the right thing? No. Do I hope they will? Yeah. But again, we'll have to see. Oh, here it is. Allow me to reintroduce myself, Senator Cynthia Loomis says, and then she's got the laser eyes. And then, if you read the comments, you can see, Senator, we live and appreciate the work you do on behalf of the Bitcoin community, but please no laser eyes. And then somebody said, are you introducing yourself as a Bitcoin maxi? And you can just see everybody's like, Bitcoin only. So I hope they got the point. And I hope the government does not fumble this, which they really could in a big way. And if they were like, hey, we're going to have a balanced portfolio of Doge and Ripple and blah, 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 right? Like, I think that would just be a really bad thing. So fingers crossed that the government does not screw this up because they could either do something really, really good for the economy and for the US balance sheet, or they could fumble it. We'll see what happens.
What if this is a big pump? Like everyone in the government's loading up on Bitcoin and then they're going to announce it.
I mean, look, there are rumors and some direct allegations that other governments are stacking Bitcoin furiously right now. I think the odds of that are pretty good. I think, governments, it's against their own interest to announce that if they're still trying to build their stack, right? So that's why I think we've seen like pretty much every dip over the past couple of months get bought up. Like if you just look at this price action, look at every like intraday dip, right? So back here in November, this was the election, and this is where the world woke up and went, oh, wow. Okay. So Bitcoin is legit. We got this quote unquote Bitcoin president, whatever. Look at every single day where there was a big sell off. Look at all these wicks into support. So there's a wick in early December. Here's a big wick in mid December. Here's a big wick, which was actually a big stop run back here on Monday, January 13th. And then just this week, there was a little pullback and a stab through 100K. But all of these dips are getting bought up furiously. Now, on the upside, there's actually wicks above 106 as well. So that's why we've been kind of stuck in this range. But for the most part, there are some big buyers out there. And this kind of 90K zone, this is a big line in the sand because it is last year's close. Let me see if I can open this yearly chart so you can see there's the expectation is that this 90K zone is going to hold as support. It's the third year in the market cycle where you typically get 3 green years followed by a bear market. So again, what that does is it sets up the expectation, but not a guarantee that that'll actually play out. So as long as we're above 90K in Bitcoin, I think you're going to see some furious buying of dips. And yeah, I'd love to finally get a breakout about above this 106, but it doesn't have to happen right away. In fact, I mean, we could chop around for months and months. And the longer we chop around, I think the bigger and the more sustainable the upside move will be. But yeah, I think governments are absolutely a part of this dip buying. And obviously they're not really doing it on centralized exchanges. There's probably a lot of OTC transactions taking place, but even if you look at the supply of Bitcoin on exchanges, I mean, we are at multi-year lows there as well. So yeah, we'll see. I think all it would take is one speech from Trump or a senator saying, hey, this is the plan. We're actually accumulating Bitcoin. We're not just keeping the Bitcoin that we've acquired from criminals, right? We're going to actually keep increasing the stack. And that, I think, would just send Bitcoin wild. So again, I don't think governments are incentivized to really say too much. I think they're incentivized to actually do more behind the scenes. So we'll see.
Yeah.
All right. What else is going on out there, guys? I know we didn't do a call for questions this week. We'll do that next week. But what are you guys looking forward to over the next few days or weeks?
We got yeah, very busy time setting up next couple of weeks for stocks, individual stocks, and news on the earnings front, news on the tariff front, potentially some big stuff there in the Chinese market as well. So we're really geared up and looking for all that. So that's what we'll be focused. That's what I'll be focused on
next week. PayPal, Spotify, Uber, Google. Yeah, huge earnings next week. Yeah, yep. Amazon. Yeah.
Yep. So yeah, there's a lot. I think next week will be a very busy week with headlines in the stock market. So we'll be chasing all those and figuring out what's going on.
Cool. Well, yeah, I mean, coming in here on Friday afternoon. So today is Friday, January 31st. So if Bitcoin hangs out where it is right now, this would actually be the highest monthly close, and I believe the first monthly close above 100K. So that's pretty interesting. As of right now, and it's still around like 1 p.m. Eastern, we're looking at about 104, 105K. So that's an interesting print that we could potentially see there. Nikki, what about you? What else is going on over the next week for you?
Well, I dove back into my, stock research. I've been looking at some stocks. I'm about to do a video for the community of what I've been doing in my own portfolio, making some moves, selling some winners, taking some trades. I've kind of been back involved with that. So I think what I'm most looking forward to is, obviously I'm a retail investor, so retail earnings, that's eventually going to be coming up in the next few weeks. And yeah, digging for bottoming breakout charts. That's kind of where my mind's been lately. We've had a lot of opportunity in the bottoming breakout chart. I've talked about it for months and months. And I think that we could be coming to a point, if the market breaks out, if Bitcoin breaks out, where there could be some serious traders to be had. So I'll be kind of keeping my eye on the charts for those opportunities.
Sweet. All right. Yeah. I mean, look, we've got a lot of stuff that is testing resistance or getting like follow through on breakouts, right? So just today, I mean, looking at the NASDAQ and then the S&P 500, it looks like, you know, we could potentially see a big breakout next week in large cap. So I
Chris,
guess a lot of eyes on that.
A great trade this week on a breakout, on an options play on a breakout.
Yeah. So CrowdStrike was a squeeze, bought on a pullback, and yeah, this was up pretty big this week. So it was an options play. So I got some leverage on it, and yeah, it was pretty sweet. Yeah, man. Just, I mean, bull market setups, man, you know, dips, squeezes, breakouts, like stuff is just working right now. So
yeah,
you got to take advantage of these times.
That's right.
Don't let my desire for a correction get it twisted. I do like taking advantage of these moments with these breakout trades for sure.
Yeah. Nick, I think you and Trav are maybe some of the only people that are like, damn, I wish I could get lower prices, but all right. Well, we can go ahead and wrap it up there, guys. Unless there's anything else you guys wanted to mention.
No, that's good. We'll see what earnings brings us next week, and who knows what's going to happen at this point. We're now in that environment where one day could be crazy and we're down 5%. I don't know. We'll see.
Yep. That's right.
5%. The beauty of what is that? A dip for ants?
The beauty of concentration, right?
Yep. Absolutely. All right, guys. Well, thanks for joining us. Make sure to like up this video, share it with a friend that needs to get their money situation right. Yeah, we'll see you guys next week. Take care.
See ya.
Cheers.